Good afternoon. In this video, we're going to go over this past week's trades in the weekly recap. Before I get into the video, if you're not in the room, you can find a link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, let's see, trade ideas room on October 2nd, SPY puts under 425. Yeah, 425. Let's see, where is this second? Right here. Had a nice sell-off on Friday, started the gap up Sunday, selling off Monday. The thing I was looking at was, Friday's lower day, which was, I said 425, right? Why did I say 425? Oh, well, why did he say 425? Let's see, what time did he call that? 9:19. Yeah, so it was at 426. So I just rounded down to the next whole dollar. Really, when I called it at this point in time in the day, it was already down here, and I don't want to call it 426 when it's at 426. And if it's at pre-market lows, I will refer to the previous day's low or previous day's close, which was right where it bounced pre-market. So I just rounded down, and 425.50 was just too close. So I just rounded down to 425. So, but let's see. So on this, I probably should have saw this coming. In fact, I did. Okay. Because whenever you see a gap down like this, was that what, 430.50, and it's down here at 426, that's a $4 plus gap down. Usually what ends up happening is everybody will rush into puts at open, causing a short squeeze at open, and that's when you end up seeing a crazy move right at open, because people are just blindly buying in puts, thinking we're just going to crash. And when you have these big gap down and big gap ups, you just can expect the opposite to happen at open. Not all the time, but most of the time, especially lately. That's just the way it's been. So, yeah. So first trade of the day, I took calls at 9:44. Not quite sure. The first 10-minute candle formed. All I can think of is that I got it a little premature and didn't break the high a day. I grabbed the 4,300 calls at 720, and it went against me, and I ended up stopping out at 3. So I probably should have waited, but it is what it is. One thing that SPY has been doing a lot lately, it's been doing like fake outs, like a double fake out, and I kind of like, if I play in calls, for instance, like if I'm anticipating it to break out, and I play calls and it goes against me, I won't jump into puts if it goes to the new lower day. I will wait 90% of the time because of this. This is exactly what I was afraid was going to happen, and it did happen. Because if I stopped out of here and I jumped into puts right here, I would have taken 2 losses just because of the fake outs on this open range candle right here. It didn't break out the new higher day. It did break out the new lower day, but it would have been just enough to get you in, but not enough to get you out with some money or even break even or anything. And then it just went back to high day. This is not favorable conditions to trade. So, so when I took the calls right here, I stopped out. I did not. Let's see. Yeah, just looking at my thing. I did not want to take puts here and take another loss. I took the loss. I just waited. Then when it came back up to high day at 10 o'clock, I did take calls right here because it faked out up here. Well, it didn't really fake out. Didn't make new higher day. Then when it came down to a new lower day, it faked out. When it came quickly back up to higher day, I figured it would break this time, so I grabbed calls. I grabbed the 4,300 calls again at 6:30. And they went from 630 to 870. Now, if I held my calls I initially bought right here, they would have gone green. But the question is, this could have just opened the floodgates and just really dropped fast, especially being in pre-market low right here and Friday's lower day right there. That could, if it tested that and broke that, it could have really been gone wrong fast. That would have never recovered. So I just cut it thinking that it was actually going to do that. And but because it did get bought here and came back quickly to higher day, that's where I decided to buy the calls right there at 6:30, and they went from 6:30 to 8:70. So then I took puts at 10:43, which was right here. And the reason I took it right here, you can see the candles. Let me just blow this up a little more. We don't need to have all that extra. You can see the body here, the wick, and the body, Well, the body's up here a little more, but everything is lining up right here at this 426.70 area. So when it got below 426.70, I was taking puts. I took the 42.70 puts at $8, and they went from $8 to $9.30. Actually, that does not make sense. It only went $1.30. I probably bought it closer to down here then. I should have bought it up here. But based on where it went from 8 to 9.30, I must have bought it down here underneath the 426. But why I didn't buy it here, because it looked good right there. Maybe I was afraid that of the fake outs, the chop. Maybe that's what I was afraid about. And I decided to wait for new lower day to actually do that, because only going $1. 30 does not make sense, but then again, it did have a pretty significant drop. I could have been out of the money quite a bit, because one of the days this week, SPX was very expensive. I think it was Friday. I don't know what it was on Monday, but I don't know. I think I got it down here, to be honest, not up here, but I definitely was looking at it up here. I probably, at the point in time, I don't know what I was thinking at that point in time, but if I had to guess, because of all the choppy and the fake outs, fake out, fake out, fake out, fake out, and this candle probably made me hesitant right here, because it broke below and it got bought back up. But I think I took it underneath the 426, 30 area, so that's where I think I grabbed it. So the 42.70 puts right there, 8 to 9.30. Then I grabbed calls at 11.16, which is probably right here. Definitely grabbed it over, probably right here, right around the 427.50 area. I don't think I would have grabbed it right here because of all the chop. If you try to play too close to the chop, you end up getting, in, and then end up taking a loss, where it moves just enough to get you in, but yet not enough to have conviction and go in the direction. So I got in over 427.50. The 42.95 calls at 760. They went from 760 to 1180. So that actually did break out, ended up working out pretty good. Then I ended up taking calls again at 152, which is right here. And this looks like a nice little inverted head and shoulders. You get the left, you get the head and the right shoulder. All this is lining up perfect. The body, the body, the body. You get the top of the wick, the body, the body, the body. So everything's lining up really good right here at the 425.60 area. So once it got above that, that's where I grabbed the 42.75 calls at 640, and they went from 640 to 1080 right there. It broke out a little bit, came back down, then it took off, up to VU up. So that ended up being a nice little play right there. So that worked out pretty good. I don't like starting out the week with a loss. The last 2 or 3 Mondays, I started the first play of the day with a loss. I do not like that. So the third Tuesday, SPY calls at 425.50. Another big gap down, 428.50-ish to 424. So another $4 gap down. This is what I was talking about. Everyone jumps into puts and it takes off up here. The whole purpose of market makers doing this is that everybody jumps in on puts thinking that we're just going to free fall. And I was expecting this kind of a move right here, but it didn't happen. It happened this day. So people jump into puts at open, thinking we're gonna dump. I want to say what the pre-market low was. I was looking at 425.50, which is, I was looking at calls over that, yeah, which is right up here. This lower lower high right there. But anyways, yeah, because it's gapping down quite a bit, everyone's going to jump into puts. Market makers going to pop it a little bit at open to get everyone to stop out before actually really ramp it up in that direction. So call this play exactly the way I expected. This is what I was expecting Monday morning, but it happened Tuesday morning. So I took the 42.85 calls at $7 at over 425.70, and they went from $7 to $10.20. So that ended up being a good play. Then I took puts at 10.01, which is right here when it broke new lower day. I took the 42.50 puts at 670, and they went from 670 to $19 if he held all the way through. So that ended up being a 100% play. Then I took calls at 12.04, which is right here. As you can see, it started to consolidate a little bit and started to make it look like it was going to bounce. I kind of look for these areas when they have like consolidation right here. And they kind of like to make it kind of look like that a floor is being formed. Then they'll push it and break the new lower day, because what happening is people are buying right here, trying to get a floor to form, trying to make it look like it's going to bounce. So, and retail's buying it for a V rally or a bounce. And it starts to bounce just a little bit to get people confident. Then they have put stops right here, and market makers just flush a little bit to take out the stops before it ends up going in the direction. So I waited, I spotted that, and I waited. So when it got over the body, this area for 421.85, that's where I grabbed the 42.40 calls at $7, and it went from $7 to $9.20. So that ended up being a good play. Then I took puts at 331, which is right here, I think. Yeah, I did. And I kind of thought we're gonna dump more, because we bounced to the 20 EMA, which is this light blue line. Then we made new lower day right here. When we came back to lower day, we broke lower day. Bounced up to the 20 EMA, came back down, going into close right at lower day. So I bought 42.20 puts at $5, and grabbed that many. The end of the day plays are just so risky. Don't recommend playing end of the day. The last half an hour plays, they end up moving huge if you get them right, but you could also lose quite a bit too. So just be very, very careful on on that. So, but anyways, my thesis was, because it rejected the 20 EMA, broke new lower day, same thing was happening here going into close, and it ended up just double bottoming and just took popping. So took a loss on that end of the day play. Then on the 4th, I said SPY puts in the 421. It's bouncing up from 418. Well, so we'll round up, say 419 to 423. Another $5 bounce in the morning, and to me, I was thinking the same thing, that everyone's going to jump in the calls and they're going to slam it before taking off. They kind of did. They kind of got people going in right here, and I didn't grab it until I grabbed puts right down here, 950, 951 is where I grabbed it, because I was expecting it to drop, not go up. So I was looking at puts in the 921, which is down at this low right here. And first 10-minute candle was green. I probably thought about calls, but I didn't. I waited, and glad I did. I took puts right here. I took the 42.20 puts at 750, and they went from 750 to 1090. So that ended up being a good play. Then I took puts again at 923, which is right here. After you set up big nasty red candle, green candle, then when it broke the new lower day at 421, I took the 42.10 puts at $7, and they went from $7 to 12.10. And I didn't trade really much the rest of the day. Just a lot of whipsaws. I didn't like this action, so So when it comes up here and breaks high a day, I just don't have much conviction that it's going to actually break and not range, because I mean, look at the action we've had today: green, red, green, red, green, red, green, red, green. I just sat out, and I probably could have taken puts here, and I probably could have taken calls right here. I just was not in the mood to trade that day. I just didn't like the whipsaw action, so just didn't trade much. Now on to the Thursday SPY puts under 423 pre-market. Traded is pre-market, which is right here, rounded down. Puts first 10-minute candle was red. Nice big tail candle right there. So on a broken new lower day, I took the 42.40 puts at 880, and they went from 880 to 1020. Didn't really move much. Did I take it? I don't think I even took it right there. I think I took it. 945. For some reason, I think I took it right here. Right at the 423.50. I don't know why I didn't take that. I remember one of the days this week, I did not take the breakdown of the 10-minute candle. I waited for a level. I'm not quite sure why I did that. But yeah, based on the 42.40 puts going from 880 to 1020, I think I probably bought it when it broke underneath 423.50, and it just dropped right there. So only moved like $1.50 or something. So that makes sense. I bought it probably right here, and it moved just a little bit, and it popped. Then I bought puts at 1101, which was right, not there. Didn't buy it there. Didn't buy it there. 1101 right here. The FU setup. Get a nasty candle right there. Bounced up. It didn't take that. Not quite sure why. I don't know why I didn't take some of the plays that I took this week. I might have been just scatterbrained or off my game. I don't know, but I didn't take this, and I didn't take quite a few trades I probably should have. But with this nasty red candle right here, then you get a green candle right there. So when it broke below the 421.70, that's where I took puts. I took the 42.25 puts at $8, and they went from $8 to 10.20. So that ended up being a good play. Then I took calls at 11.12. 11.12 right here. Yeah, right here. You can see you get the body, the wick right here. You get a nice little congestion of candles right here. So it broke over 422. I grabbed the 42.40 calls at 710, and they went from 710 to 860. So that makes sense. That lines up with that. There was a nice little play, and then it kind of rejected a little bit. I took calls at 231, which is right here, I think. No, I didn't take it right there. Why didn't I take it there? I don't know. Was this the day Powell was speaking? This could have been the day Powell was speaking. I think Powell was speaking this past week. I'll have to look. What day was he speaking? Oh, Powell was speaking Monday. Okay. I guess that wasn't it. Anyways, let's see. 231, so it must have been right here. Yeah, I took it up here. Get these massive green candles. Get a nice red candle right here when I broke over 424.50. I took the calls. I took the 42.60 calls at 5:30, and they went from 5:30 to 10:30. So they made a nice $5 move right there. I definitely like the setup. I don't like chasing, but if I'm gonna chase, I will wait until after a nice big red candle comes in. Then I will actually take an FU setup. The FU setups have been pretty good. High percentage win rate on those things if you play them right. Sometimes you just you get in too soon and it ends up being a fake out before it actually breaks out, and you do get caught. I have definitely got caught in some of those, so it is what it is. So it was definitely a better day on Thursday. Friday, this was the day that premiums were really, really high, and I did not want to play this that much, because first of all, a lot of things going on this day. One, I traded his room called SPY calls over 421.50, which is right here over this high right here, because it was down here. when I called it. My first 10-minute candle was red. I was like, okay, maybe I'll grab puts because this was a what was it? Was it earnings? No, it's not earnings. It was unemployment rate and yeah, unemployment rate and non-farm employment change. So that came in hot, and as you can see, the initial reaction was negative. It just dumped, then it bounced up. And because it bounced up right here, that's when we think that we might go into puts and break below 420. Because usually we'll stay down here, then we'll bounce a little bit at open, then we'll dump more. But because the initial reaction was really negative, when this nasty red candle right here and it popped up, the first 10-minute candle was red. Okay, now I was thinking, okay, we're gonna have puts. We're gonna end up dumping here because of the way that was setting up, going into open. So that's why I grabbed puts. I grabbed the 4,200 puts at 650, and then I'm dumping them at $2. And the thing is that they were so far out of the money. I bought them right here because it popped up a little there and it dropped more. They should have turned green. Because they were so far out of the money, because premium was so high, they never turned green. Now, because if it was a normal Friday, I probably would have been maybe 1 or 2 out of the money, and they would have definitely turned green on this drop right here. But they didn't. They were too far out of the money. I was afraid of chop. I was afraid because premium was so high after this nasty dump that it was going to be a choppy day, and they were just going to eat premium all day. So then it popped new high day. I did not want to buy it. Then I saw the FU setup right here. I thought about it. I just wasn't sure if it was going to break out again. I got faked out in the morning, and I didn't want to, ruin my week or ruin my day and take another loss. I mean, I could have taken calls right there. I didn't. I kind of kicked myself afterwards, but the PDC was right there. This is where the news dropped. The news reacted was negative. Then it's back up, made a nasty V rally right here. So I was hesitant about taking the FU setup because of the news was bad, but yet the market was taking off. And then it's at V rallied back to pre-market, where it broke down at pre-market. And I was just like, okay, I'm not confident in taking calls right there. Then it just took off, and I just like I'm not touching it. And then I did take puts at like 137, which is right here. And the reason I took it here was right at the 430 level. I took the 43.10 puts at 820, and they went from 820 to 1060. I went at the number 430. Right when it hit 430 or close to 430, which is like 429.90ish, I grabbed puts instantly, thinking 430 was going to reject. We just went $10. We have not gone a $10 range, and I don't know how long, especially when news dropped. It was not good. The initial reaction wasn't good. Then it just V-rallied. I was not expecting this kind of a run. So once I got this play and ended up being a good play, I just I recovered my loss and ended up having a green day, and I just stopped trading. This was just craziness. I was not interested in trading that. So yeah, it was just a huge J hook if I've ever seen one. So yeah, couple of days make me question why. I might have missed some trades. I definitely missed a few trades. Definitely missed some things I should have taken, but I'm not going to catch every trade. And yeah, Friday just was, I didn't want no part of that. Then the day was whipsawing. Was it this day? No, I think it was this day. Yeah, this day was whipsawing. I didn't want none of that. And so you just got to know when things just unfavorable, and just not play the days that you don't like. And days when SPY just goes ridiculous like this, you can't really call it top, because SPY can just keep going and just keep going. Yeah, I got lucky, but this could have been just as bad. I could have taken a loss on that, but I was expecting it after a $10 run that we'd have some kind of like breather, some kind of like small drop just to get a play. But these are the days I do the worst, because these days are so dangerous, because playing calls after it's already up $9 on the day is just stupid, and playing puts is just stupid. So you can't really call the top, and you can't really buy calls. So it's just one of those days where you just, don't do anything and just wait. And if nothing happens, then nothing happens. But yeah, it's just kind of crazy. I don't do well on these straight up days like this. I always end up taking a loss, and I always look back at my trades, and it's the days I have my worst days are days like this. I mean, yeah, you could say, yeah, you can just keep buying calls and being good, but you don't, and doing good. But your problem is you don't know it's going to go straight up. You're playing in real time. You're not looking after the fact, after the day is said and done, and thinking how great you are, because you're thinking in real time. You're using what information you have, how it reacted in the morning, and then it just didn't do too much. It opened, and it just acted crazy on bad news, and just you just doesn't make sense. And when nothing makes sense, you just can't really make money if it doesn't make sense. And that's when you end up taking losses, and you just chasing this. It's not a good idea. I mean, look at the green candles on this. I mean, that's just crazy. I mean, yeah, you could have bought calls right here on the breakout, but I mean, look at this nasty run. And the flag right here definitely did break out, but after a $9 run, when's the last time we had a $9 day, a $10 day on SPY? I mean, I don't even think that's $10 though. 442. No, that's not $10. This $10 day. Nope, not a $10 day. 436. Nope, not a $10 day. We haven't had a $10. See, we haven't had a $10 day in a long time. This was close. This was 9, but this was a $10 plus day. So yeah, we haven't had a $10 day in a long time. So there was no reason whatsoever to buy calls up here except for FOMO and just poking and hoping. And that's just not the way I like to do things. You can do it, but I'm not. And to me, I just didn't like what I was seeing, and I just stayed out of it most of the day. So that's just how I do things. You can do what you want. Don't expect me to do what you want me to do, because I won't. I'm going to do what I want. And survival is the name of the game. So that's going to do it for the watch list. I know it was a pretty crazy week. Hopefully this week coming up is going to be pretty good. Now with the things going on in Israel, I think that there could be a very volatile week. So we'll have to see what happens this week. So that's going to do it for the recap. And thanks for watching.